Hey everyone, I hope you guys are doing well. The market is booming today, so we have to talk about that and in terms of these earnings coming up after hours. Now, the big things we were talking about over the last week were Amazon, Apple, and Google here. Last night with Meta's earnings, we saw a huge pump up. I think Meta is up almost 25% right now. Now, I sold my hedge plays at open and I made a good little profit off of them. For today, as far as these plays are going to be concerned, I think Amazon is probably going to be the best one if you guys want to do options. And I say that because I think that Amazon is going to have the best opportunity for volatility here. So Amazon can pop 5%, it can drop 5%, where Apple tends to just go up maybe 3%, 2% during earnings or drop down 2 to 3%. Google, I would say, is more of a wild card, but because of all the earnings news that we had today, as far as Meta, and a few weeks ago, again, Snap, even though Snap wasn't as good, you could see Google saying, hey, it's not going to be as bad as we feared. We're making some progress in our cloud technology. And from there, we can see Google have good earnings as well. So we could actually see the market start to boom back up a little bit more before the economy does start to tilt back down. But as far as Amazon here, you can see it's currently having some issues with the 200 daily moving average. If we go over here to maybe the 15-minute chart, you'll see that we did run into a Fibonacci extension level this morning, but we only got rejected by it once, and then the next time we came up, we managed to break out, and then it was pushing up now. Okay, so the first rejection there, moving back up. If I wanted to take a trade on this one at this point in time, I would really consider just doing a hedge play with probably on the upside here, just because of how everything's working out. This is probably my most bearish of all the plays here, like more bearish than Apple and more bearish than Google. But because of all the good news here, you might see something happen. But I would still recommend having a hedge just in case it doesn't work out, because you never know with Amazon. Because although they have a very good cloud component, they are susceptible to the market if people aren't spending as much money, if they didn't have a good holiday quarter, that type of stuff. Okay, although I think they probably had a decent holiday quarter. I think the problem is with the guidance going forward. But if you guys wanted to have some type of options play on this, which is a hedge, and you're going to be making money off the volatility here, basically, I would have a 120 strike price expiring next Friday, just to be safe, because it's already Thursday. Don't want to make it too risky. Next Friday. Other than that, if you wanted to do a 115 strike price for tomorrow, you could. That would be okay. But if you want to do like a 120, you're probably gonna have to push that out to next week. Okay. That way that theta doesn't kill it tomorrow, because even if it skyrockets up to $18, you may make some money, but you could still risk losing it all, especially once the market opens up. Now, on the downward side, we're at 112.47 right now. I would just say come back down here to 104, 105. I'd probably just have a 105 strike price put if you wanted to go out to next Sunday. If you wanted to go a little bit earlier, you can go 1.8, 1.9 if you want to hold it for tomorrow. I just want to be prepared in case it goes a little bit more on the volatile side. So I'm probably going to do both types of plays, one for next Friday, then one for this Friday. Because if I do like a 108 put here, if it comes down just 3%, I'm making some money. And that's for tomorrow. But if you want to play it till next week and say, hey, we're getting rejected, coming back down, yada, 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 maybe 105, maybe even as far as 103, because that's an 8% loss. Amazon can do that within a week pretty easily. So that's my thoughts as far as Amazon's concerned. So be careful with these ones as well, because earnings are always a little bit more antsy. But if you guys are looking for more day trades, you, today wasn't a good one because we just kind of gapped up, right? There was a resistance level right there, but I mean, come on, we've played with a lot of these resistance levels over the months, and you can see how they don't always last for a while, right? Pump up a little bit there for just a day, crash back down. They haven't been the most reliable because earnings and the Fed data this week has just killed all the technical analysis, if you will, right? Now, moving over here to Apple, this is the big boy that's has been performing very well during the earnings over the past few months. So if you guys just wanted to go long on something and with no hedge, this is probably your bet. I am always concerned about the economy, but so far earnings have been mixed. But big tech has been doing a good revitalization, good comeback here, right? So we're still very far away from any type of potential breakdown or anything like that. At this point, we are getting a little bit overextended as far as RSI is concerned. That's fine for now. The market's kind of in this euphoric stage that we had talked about yesterday. Now, as far as this one's concerned, if you guys did want to make a trade, I would only go up to 155 for next week or up to 160. But I'm thinking more Apple because I would only hold this till Monday, maybe Tuesday. I want to get in and out of this one because I still think that Apple is a little bit more choppy because it hasn't come back down as much as other asset classes or other assets like the Googles and the Metas and stuff like that. You might see it pop up around 5% after earnings. I really don't think it's going to be some type of big parabolic 10+% move, especially since it's already up 3% today. I think at max it goes up 5% tomorrow, and then maybe tomorrow, Friday, you might have an opportunity to sell out or scale out. I'd probably scale out a little bit tomorrow, and then from there I'd scale out the rest Monday or Tuesday. Now, I would probably do 155 to 158 calls. I don't know if they have 158 calls, but 155 to 160 expiring next Friday, just to be safe. If you want to do something else, I'd say just buy 150 calls expiring tomorrow. They're probably going to be a little bit pricey though, so just be aware of that. This is a safer play, but if they don't have good earnings and you're only buying the calls, you do open yourself up to a little bit of risk there. Okay. Now on the downward side, if you guys do think that Apple is going to disappoint, I would have maybe a 145 strike price put that would expire next Friday. If you want to buy something cheaper, that's more of a YOLO type of play, definitely go for the 145 that expire tomorrow. That way, if Apple does drop down, because it has less upside than downside, I would say, right? So at this point, if it drops down like 5%, something like that, you're making a lot of money there. But there's so much resistance up here that even if it does try to gap up, I really don't see people trying to buy up Apple over here because people still understand, right? We got one level here, that's what we're testing. Second level, third level, fourth level. Everybody still knows the economy is going in the wrong direction. People are just kind of banking again on the Fed doing cuts, especially after Jerome Powell with his rosy report yesterday. So I'm more saying this is more of a YOLO if you want to do a put. But if you guys do think that, you guys have done some analysis on the 10K report, something like that, you see something weird coming out, especially with all the stuff going on in China, 145 puts could do some work. If you guys want to do a hedge play on this, I would do 155 calls expiring next Friday, 145 calls expiring tomorrow. That'd be the interesting play there. With, of course, more of an emphasis on the calls here. Because, I know you guys can see this a little bit here. Last few quarters, beat earnings, beat expectations, beat expectations, beat expectations, and beat expectations. So I'm kind of happy with Apple, but at the same time, it's not a bad idea to have a hedge on it. But if you guys don't want to do a hedge all the time, right, this is probably one of those ones we could just safely do a call. Just be careful. Every now and again, we have a surprise, but Apple's usually not the one that surprises us. And last but not least, we come over here, and as far as Google's concerned, it's up like 5%. So this is just not something I really want to trade here right now. We blasted above the 200 daily moving average. We have the golden cross there on between the 20 and the 50. Not really too much because you see nothing really happened here besides, I guess, that little pump up. But at this point, we're hitting back up to this level of resistance over here. So things are going to get a little bit more choppy for Google in the future. However, in the short term here, the only level of resistance that really matters is going to be right there around $111. And if we go over here to the weekly charts, right there, a little bit lower, 109.5. So kind of like around 109.5 and $11 really. That's going to be that next big level of resistance. It looks like. I'm not as worried about moving averages honestly because you're going to see how it's kind of choppy, right? Like all this is really just choppy as far as moving averages. Nothing is really held up as some type of strong support resistance. Even going back over here, broke down, broke back up, broke down, came down, came back up, down. Nothing was really holding steady. So the moving averages aren't really my biggest problem. That's why I think it's more kind of around the 111 level. But go over here. I don't think the Fibonacci's are going to be the greatest help for us unless we talk about the date of tomorrow, like when we're actually trading. You see one right here, we're at 110. I would say if Google has some good earnings related to YouTube Shorts growth, their cloud services and YouTube growth, and maybe some of the Google search engine type stuff, the ads, I think Google can get up to way past $111. But I would say get a 111, 112 strike price for next Friday. And on the hedge side, if you guys did want to take it, just go with a simple $100 play that will expire next Friday as well. If you guys want to have some more ambitious plays that expire tomorrow, I would go with, these would of course be cheaper plays, so you don't have to put as much money to back them. I would probably do 109 to 110, no, probably 110 strike price call tomorrow. And on the bottom side, I would actually just stick around with a 100 or 102 put as far as puts are concerned that would expire tomorrow. Probably with another more emphasis on the bullish side here. We're just going crazy at this point. The only thing that's really going down today is oil. And that's not too bad, as oil relative to everything else is just overbought, and everybody's probably selling off these oil assets to go put back in tech before probably tech has a turnaround over the next few weeks, which is going to kill a lot of people here. But yeah, take your time with these ones. But honestly, guys, you're going to make more money day trading on some of these plays. Like even just going over here to NVIDIA, these short-term scalp plays, right? Just one day breakdown, boom, look at that. Nice little money maker. You could have probably scaled out here at support, here at support. Guess what? There at support, you could have scaled out. Now, it kept on falling down, sure, but you want to take your money. These simple plays seem to be doing wonders at this point, and I'm watching a lot of these plays occur at this point in time, but, you know, right now we're running up against a little bit of resistance on NVIDIA. Not the end of the world, but if you can have some good plays like this that kind of last for maybe a few days, this is like 1, 2, 3, 4. These are much better strategies than trying to trade an intraday type of pattern, okay? Unless you guys want to go 5 minute and you guys are scalping, you guys can do that just fine. But understand you're going to be scalping and holding for not more than half an hour or an hour or something like that. But if you guys want to do more day trading, definitely consider doing these multi-day patterns because they are so much easier. Because even now, if you think about this, what happened? There we go. 1 day, 2 day. I guess we don't have to really worry about the downward side here. But we broke out, came back down, tried to hold it as support, kind of did hold it as support, a little bit iffy because it's pre-market, right? Then managed to kind of rally back up on top of it. So far, it looks like day trading still is king here. I'm going to be doing some more analysis for you guys tomorrow because I've been working on a template that I can put on TradingView that I can share with you guys where I do a whole bunch of technical analysis and I hit this little export chart data or sharing right here, this little thing right here. And that way you guys can actually see the data. It'll be open to anybody, but I'm just going to tell you guys about it. So you guys can just kind of see my own technical analysis and make your lives a little bit easier. And I think by sharing it, there's some type of way you can actually import the data. So I'll be doing a bunch of technical analysis every Friday, Saturday, Sunday, in preparation for the next week. And you guys can use that as much as you want to. And daily, I'll go through there for like 5 different stocks. It'll be for Tesla, Apple, Microsoft, Google. And you guys will be able to use my technical analysis if you want to, and definitely add your own. I'm not perfect, so just definitely add your own as well. And let me know how it works out, okay? So see you guys a little bit later, but guys, we're in a really good spot. Hedges are probably the safest bet right now, but it looks like with all the good earnings we've had so far, we should probably have a decent return on Apple, Google, and Amazon today, with the most bullish one probably being Apple, but I'm really excited to see what happens to Amazon. Google's more iffy, but I do think that their cloud services and the way ads have been picking up as far as Meta, I think they should be okay.